Woo! All right, week 6 outlook number 2. Let's go ahead and jump right in. A little bit upset, but I'll explain why. Starting with the British pound futures, the analysis is playing out exactly as expected. If you see here, I'm kind of upset. Actually, I'm really upset because this play right here was what we call, or what I called out, refined it to the 1 hour price gap for an entry, and it's just heartbreaking to see. On the micros, it actually played out. But here, 50% of the 1 hour price gap, which was what my setup was based on, we literally stopped one tick below it. I don't know how the micros hit, but the mini didn't. It is what it is. Chalk it up to pricing BS. All right, but anyway, so the analysis is playing out perfectly. We got a very nice response so far from the price gap, which is in continuation of the macro liquidity draw. The initial entry was up here based off the 5 minute. We went over that, and then we explained after the break of structure, conservative 4 hour break of structure, we would look for opportunities, which ended up being this 4 hour price gap refined to a 1 hour price gap for our next entry. And we know what our targets are. Conservatively, if you were to look at it from this perspective, your immediate target would be this low here that was generated up based on the pullback. And so what's also really cool to see here is that even though even though we got this break of structure here, this is a price leg. So from this high to this low, because of this action right here, where we took out a previous high, that is a pullback. And that solidified the pullback. So now price was justified in coming to mitigate the last inefficient portion of this very efficient price leg moving down during the impulse phase. And so the only inefficient pricing that was left inside of this price leg happened to be what we called out. We weren't framing it up that way, but that's essentially what happened. Was we had a liquidity draw, we generated a price leg where we had high, low, high, low, high, low, high, low, lower high, unwillingness, break of structure, essentially, which initiated the pullback. And once we argue that's a break of structure, it's really a liquidity draw, but initiated the pullback here, and that gave the response to mitigate the 1 hour price gap, 4 hour price gap, and now we're getting a response here. Expecting for price to take out this liquidity point here. If it were to come back, I don't really see any inefficient pricing that's left unmitigated in this area. If we are going to mitigate any sort of liquidity, it would be to take out some of these highs. That's the only counterpoint that I can see for this trade moving forward. Is there's really not any inefficiency. I mean, there is being generated, but this is balanced, this is balanced, this is balanced. Everything is balanced here. So any imbalance that's created is going to be during future price action. So our conservative target, all that being said, would be this low here. Next target would be a 4 hour low. If you're sticking with your targets on the 4 hour, this would be the next target. Then you really just keep picking lows. But ultimately, we know that the overall macro trade target is based off the daily, which is this daily liquidity point all the way down here. So we are in the very early stages of a very, very strong transition based off of a liquidity draw, and we're really front running this trade setup. So if it plays out as we see fit, we can see, like I said, a very low effort, high volume, high liquidity bearish run here heading towards this target here. So there's going to be most likely tons of opportunities on the lower time frames. That's why we look at the 4 hour structure to see things, because every time we're in the continuation phase, we want to see those highs and lows get generated, and every time a low begins to pull back, that's an opportunity to capture another position to continue the trade. Especially if you missed out on the early positions, like I did, then you can bank on continuation entries to present themselves. All right, so that's what I'm seeing on 6B1. On gold, while gold is looking like a bullish range for sure, I pointed out this price gap here, this area of interest that I'm looking at. It's validated based on the fact that we mitigated a previous price gap, and this led to a break of structure, and this is the only unmitigated really price gap here that's left in this area. So if gold is to come back up here, because we have transition states, I would not really be expecting price right now to head for the all-time high. I'd really be expecting for a transition or continuation of bearish price action as price pushes up, mitigates this price gap here, or it could possibly just continue moving downward. That it's not a guarantee that price is going to come back here based off of this momentum. This is very strong, very sustained. And then looking at it from the macro perspective, yeah, these candles are, this is a very sustained move. And there's not really much inefficient pricing in this area or on this side of the range. But as we look lower, we can see, some area here, but that's not the point of the daily. But looking at it from the 4-hour, this really has no resistance to moving lower in the immediate term. And especially coupled to, real world events, a lot of people are looking to sell out of gold because blah, 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 blah. The price action is showing bearish sentiment right now. All right, so that's gold. NQ is surprisingly looking good. I mean, I like seeing this price action here. We have a lot of new developments here. I did not look at this, but essentially we do have mitigation of that price gap here on the 4-hour. I was expecting this to continue bullish price action, but this failed very miserably. And we got a very, very nice response, and it looks like we're setting up for a bearish play here to target this low, especially since that this range, or this essentially price leg here, this pseudo price leg, is completely balanced now. Everything that was generated in the discount side of this range, and everything on the excuse me, on the premium side of this range is completely balanced. This price gap was the last area of interest that was left unmitigated. So now if it looks like price is showing its hand and we're getting bearish price action to move lower. And so because we have we have everything mitigated on the discount and premium side, unless this right here is a draw on liquidity, which will be determined by future price action surrounding this low here, this could very well be the transition of the market state. But I don't want to extrapolate too far. But if this ends up being a liquidity draw, then yes, we look for bullish price action to continue. If this ends up being a break of structure, we're targeting this low here. And that's the low that will transition us from a bullish run into a bullish range. And that's going to be quite interesting. Because if we do transition into a bullish range, this is quite a large bullish range where we have the initial price leg, or the initial insertion point and structural point of this bullish range is all the way down here. This is what caused the break of structure of this bearish run, or this bearish range essentially. And so if we get a bullish range, it'll exist based off of this low to this high, and then we would have a lot of room to mess around, or a lot of room for price to play in. So it looks like price is setting up for something of the sort, but we'll see. All right. And then on silver, haven't really looked too much, not going to talk about it. And then on the Dow Jones. So the Dow Jones is very, very consolidated right now. We are teetering. We're playing really heavily in the premium side of this current price leg. I've talked about it multiple times. I'm still going to stick to the thesis here that this is the origin of the move. I'd like to see price continue moving deeper before exiting this price leg, whatever way it exits. I want to see this mitigated. So that, I mean, there's not really much to say here other than that I don't really see price breaking out of this price leg until it mitigates the origin of the move. I discussed in the previous outlook if I think I did, but these are relatively equal lows now, and I did not see this move here taking out the all-time high, especially if there is something unmitigated inside of a price leg. And so all of these wicks, all of these, highs that are being generated here, and all of these draws on liquidity is just really trading inside of a range, and we're just generating a ton of liquidity above these highs and a ton of liquidity below these lows. And so there's not really much to play here above these highs. So if this is building up a resistance, essentially, for price to draw higher, we're resisting price moving higher, there's only one other way it can go, and that's lower. And we know where price is going to draw to. If it's going to transition, it's going to draw towards liquidity, and that liquidity are these relatively equal lows here. And if we grab these relatively equal lows, then I would expect price to mitigate, this price gap, really relatively 100% of the price gap, and the mitigation of the origin of the move. Now, late stage inside of this, I said there wasn't much, but this is going through my mind. Late stage, if price were, to have a very impulsive move downward here in the next few days, heading towards these equal lows, even though this is the origin of the move, I would be remiss to say that this could be a dead play. It still is the origin of the move, so it still could get a very good response. And sticking to the pro trend bias, this is the play that I really want to see. So all of this here is just a bunch of noise, essentially. But given the strength of the premium side of this market, if this ends up sustaining and the bearish price action sustains moving lower, and we get, a very lackluster response from here, then I can definitely see price turning over and taking out the low and transitioning us from a bullish run into a bullish range. All right, so that's what I'm seeing. I told you guys it was going to be a very volatile month here in February as markets start to pick up. There's a lot of, real world events that are taking place, and just a lot of things changing, funds moving around, all that. So yeah, let's have a really fun time. Stay diligent trading in this February. Peace.